Hi friends, in this video we are going to discuss about some of the few questions from October 2020 exam from the module of accounting and auditing. Okay, so there are lots of basic questions were asked from this particular area. So it is very important that you should have a basic idea about each and every concept. Okay, so moving to the first question, sequence the following activities in the process of accounting. So this is about accounting process. You have to arrange them in order, and here we have the different options like journalizing the transactions in the ledger account, recording the business transaction in the books of entry, preparation of annual financial statements, preparation of trial balance, deriving meaningful inference for business decision. And you have different options goes like this: A, B, C, D, E, A, B, D, E, C, D, C, E, B, A, B, A, D, C, E. So you have to make them in order. So what is this actually accounting process? Accounting process is actually a cycle, an accounting cycle. It includes a procedure of collection, summarizing, and from that we are making a lots of decision which is very beneficial for the organization and which is very important for the organization. So this involves a number of steps. There are different steps are actually involved in accounting process. So we can go through that particular steps. It firstly starts with identifying the transaction. Okay, so first of all you should identify various transactions which is happening in an organization. Like if a person invests rupees 5 lakh into business. Okay, so this investment from a part of that particular person, if it is a owner, the owner make an investment of rupees 5 lakh in the business, we know that that is capital, right? So what is actually, so that is the transaction. So we identified the transaction that the owner invested 5 lakh in the business as capital, right? So that is the way you have to identify the different transaction which is happening in an organization. And the second step is that you have to record this transaction in journal. So journal is the main books of entry. That means here you are recording this transaction as journal entry. How we will record this? When we consider about the example, that is the investment by the owner rupees 5 lakh as capital, we can say that the entry will be cash account debtor to capital account, right? So this capital means the amount that is contributed by the owner into business. So there will be a debit and there will be credit, cash account debtor to capital account. So debit and credit aspect will be involved and the debit and credit must be equal. So that is about the journal entry. So this is actually a journal entry. If there is a purchase, if there is a sale, for everything you should record it in journal. Okay, that is journal entry. And after that what you have to do is that you have to transfer these particular transactions or journal entries from the journal to ledger. Okay, from the journal to ledger. So for every journalization, in case of journalization, you can see two accounts. Like from our example, there is cash account and capital account. So you have to make or you have to post these items to both these ledgers. There will be cash ledger, there will be capital. So from to all these accounts, you have to post the amount from ledger. So from ledger to from journal to ledger. So journal to ledger is actually the process of transferring this particular entries from journal to ledger is actually known as post. Okay. Now coming to the next step, that is unadjusted trial balance. You are preparing trial balance from the balance which is available in the ledger account. For each and every ledger account you can see the balance. Okay, you have to take this balance and with that you need to prepare a trial balance. So that trial balance is actually an unadjusted trial balance. So we are preparing trial balance based on the balance from the ledger accounts. Okay, so after that what you have to do is that you have to prepare worksheet in order to find that whether there is any, whether the debit and credit are equal, whether there is any discrepancies. So you can find all these with the help of this worksheet, and if there is any adjusting entries remain, you can find all these things from this worksheet. And after that what you have to do is that you have to make some adjusting journal entries, that is like a provision for debt, bad debt, doubtful debt, depreciation or prepaid expenses, income in advance. All these are considered as adjusting entries. So you have to make an adjusting entry for each of these items. And after this adjustment, what you have to do is that you have to make the financial statement. That is a statement which gives you the idea of overall position of the concern, how much asset that firm possesses or how much liability, all these you can identify it from the financial statement. Finally, what you have to do, you have to close the books of accounts of that particular concern. So this is the way how this accounting process is going. Okay, so this was the question which is asked for you. So let us take this question once again. Here you have journalizing the transaction, the ledger account, recording the business transaction, the books of entry, preparation of annual financial statement, preparation of trial balance, deriving meaningful inference for business decision. So what was the first thing? Firstly, you have to identify the transaction. That was the first step. So please check that whether that particular step is given in this option. When you go through the first one, that was about journalizing the transaction in the ledger account. So that is not correct. Yeah, recording the business transaction in the books of entry. So this is the first one, right? We are recording the business transaction in the books of entry. That is the first one. Correct. So option B will be the first step which is included. So when you go through the option, you can see that there is only one option which starts with B. So if you know this particular thing, you can directly comes to the answer. In situation anyway, we can go through the other steps also. So B is the first one. Then what you have to do, you have to journalize the transaction in the ledger accounts. The next one is about journalizing the transaction in the ledger accounts. Next one, so B, A. Then what is the next thing? Preparation of annual financial statement, no. Preparation of trial balance, yes. From this option you can go for option D, as it is about the trial balance preparation. How we are preparing trial balance? We are preparing trial balance from the ledger account balances. Okay, so B, A and D, and then it is about the preparation of annual financial statement, and with that what you can do, you can make a meaningful inference for business decision. So the correct option will be B, A, D, E, C. Okay. So moving to the next question, you have to identify the correct equation from this following. It is about opening capital. How can you calculate opening capital? So here we have different equations. You have to find the proper one for calculating opening capital. So before going to this particular equations, what is this opening capital? Opening capital means the capital that company holds at the beginning of a financial period. Okay, that is actually mentioned as opening capital, right? So coming to an operating firm, this opening capital means the closing capital of the last year will be the opening capital of the new year, right? The closing capital of the last month or last year will be financial period, okay? That will be the opening balance of the next coming financial year. Okay. See, in an operating firm, the ending balance at the end of 1 month or year become the opening balance for the beginning of the next month or accounting period. So the closing balance of a particular accounting period will be the opening balance of the next accounting period, right? So coming to the equation of opening capital, how can you calculate opening capital? You can calculate from closing capital. You should take closing capital and you have to add it with drawings, then you have to deduct additional capital. If there is a profit, you have to deduct it, and if there is a loss, you have to add them. Okay, so closing capital plus drawings, additional capital minus profit plus loss. And if it is a case of closing capital, this will be in a reverse order, that is opening capital minus drawings. Here we add, in order to find closing capital, you have to deduct drawings from opening capital, then you have to add additional capital, but in order to find opening capital you have to deduct additional capital. Then if it is profit you have to add, and if it is a case of loss you have to deduct. So this is a way how you can calculate opening capital and closing capital. So our question was about opening capital, so for next time they may go for closing capital. So you should go for this also. So coming to opening capital, how can you calculate? See, coming to the options, opening capital is equal to closing capital plus additional capital minus drawings minus profit. So here we added additional capital in order to find opening capital. Is that correct? No. In order to find opening capital, you have to deduct additional capital. Additional capital means the capital contributed after that opening period. That means during some period of that particular financial year. So in such a situation, you have to, in order to find opening capital, you should deduct additional capital. So in such a way that you can eliminate option A. Coming to option B, closing capital plus drawings minus additional capital minus losses. Yes, you have to add drawings and you have to deduct additional capital. And what about losses? If it is a case of losses, whether you have to add or whether you have to deduct. See, whenever there is a profit, you have to deduct, and in case of loss, you should add it to them. Okay. So in a such situation, this will be also eliminated. So see how they are giving these options. It's so confusing. Okay. Then option C. So this one also wrong. Opening capital is equal to closing capital plus drawings minus additional capital minus profit. Correct. So this is the correct option. And if it is like closing capital plus drawings minus additional capital plus loss is also correct, and minus profit is also correct. So the correct option for this particular question is option C. And why option D is not the correct answer? Because here we are deducting drawings. Okay. Not to find opening capital, if there is any drawings, what you have to do, you have to add. In such a situation, option D is also wrong. So the correct option for this question is option C. Now the next question, the going concern concept is the underlying basis for. So which of these situation is actually based on going concern concept? So before going through the option, you should know what is going concern concept. Going concern concept is actually an accounting principle under GAAP, generally accepted accounting principle. So what is this going concern concept? Based on that particular concept, it is assumed that the firm or the company has a long life, an infinite period of life for the particular concern. That means it is not going to liquidate in near future, it is going to work for a long period of time. That is a basic assumption under this going concern concept. So based on that assumption, like firms doing lots of things, like if you are taking the case, an example of depreciation, that means the computation of depreciation on the basis of expected economic life of fixed asset. We are computing depreciation of a particular fixed asset based on its life. Like we are calculating the depreciation based on the life period of that particular asset, right? So this is actually a practical explanation or practical example that you can put forward based on this going concern concept. Like take an example of our life. We are also planning lots of things that we are doing or we will do. After 5 years you want to do like this, or after 2 years you want to make a home. So like a way that you are also planning certain things. Why you are planning certain things? Because you are assuming that you will be there. Okay. So in such a case, or this one is also based on such a concept, going concern concept. The firm will have a long life. So this depreciation is considering about the life period of that particular asset in such a way that we can say that this depreciation on asset is actually an example or which is based on going concern concept. And again the prepaid expenses or accrue expenses, all these are, we are paying expenses in advance. Why we are paying expense in advance? Because we are assuming that we will be there and we should pay that in future. So if you have fund, you can pay it in advance, right? So this is also about, yeah, you will continue, you will do business again and again. Like this also based on the concept going concern concept about the life period of that particular concern. So from coming to this question, the going concern concept is the underlying basis for disclosing the market value of securities. Is that connected with the going concern concept? Disclosing, that is about disclosing the market value. That means you should give a true picture. That is not correct based on this question. Then consolidating the accounts of subsidiary company with those parent company. Yeah, we will make consolidated balance sheet and all those things, which is not connected with going concern concept. It is about making a consolidated financial statement in order to find the performance of both these companies. And what about depreciating financial fixed asset over the useful life? Yes, this is actually a right explanation or a right example which you can put forward for going concern concept. The depreciation, we are calculating depreciation on the basis of the life period of that particular asset. And option D, disclosing the sales and other operating information in the income statement. So see, the correct option for this question will be option C. Okay. So the next question is, when current ratio is 2:1, an equal increase in current asset and current liability would result in no change in current ratio, increase in current ratio, decrease in current ratio will double. So in this question it is given as current ratio is 2:1, and the question is, if there is an increase both in current asset and current liability, same increase in current asset and current liability, what will happen to this current ratio, whether it increase, decrease or remains same or whether it double. So that is a question. See, we know that we are calculating current ratio with current asset divided by current liability. So from this basic we can take an example, like just assume that if current asset is rupees 2 lakh and if current liability is rupees 1 lakh. So the current ratio will be, in this case current ratio will be current asset by current liability, that is 2 lakh by 1 lakh, right. So in such a situation you will get 2:1. 2 lakh divided by 1 lakh you will get 2:1. This was the situation. Now the question is, if this current asset or current liability increases, so in such a situation just assume, and the increase should be equal, that is how much increase in current asset, the same amount should be increased in case of current liability. Just take that if this current asset become 3 lakh, that means there is a 1 lakh increase. Again for current liability also there is a 1 lakh increase, that is 2 lakh. Okay. So this is a second situation. Okay. So in this situation, that is in such a situation current ratio will be current asset by current liability, and this will be 3 lakh divided by 2 lakh, and the new ratio will be 3:2. Okay. So here there is an increase of rupees 1 lakh in case of current asset and current liability. In such a case what happens to the current ratio? Now it is 3:2. Earlier it was 2:1 and now it is 3:2. So see how this difference, whether 2:1 is greater than or less than this 3:2. See, 2:1 means in case we can say that the most of the item, or there is a larger amount of current asset and the current liability is just half portion of it. But coming to this area, current asset is about 3/5 portion and current liability is 2/5 only. So in such a situation current liability is more comparing to this situation, and here we know this 2:1 is actually greater one. Okay. So this 3:1 is actually less than 2:1. So what is happening? So in such a situation, in case of this increase in current asset and current liability, the current ratio will decrease. Okay. So from our options you can see that no change in current ratio, increase in current ratio, decrease in current ratio, and current ratio will double. So you can go for the third equation, that is option C. There is a decrease in current ratio, as earlier it was 2:1, and now after increasing 1 lakh rupees in both case, current asset and current liability, current ratio become 3:2. This is a lower number comparing to this. So the current ratio decreases. Okay. Now moving to the next question. This is about EOQ, calculating economic order quantity. There are lots of questions asking from this area, that is about the computation of EOQ. So it is very important and you should study them. Okay. So a manufacturing enterprise monthly consumes 1350 units of raw material at the cost of rupees 20 per unit. Determine its economic order quantity given the ordering cost is rupees 2400 and carrying cost of inventories being 30% of the price paid. Okay. So the monthly consumption is actually given as 1350 and cost is given as 20 per unit, ordering cost is 2400 and carrying cost is 30% of the price paid. That means the price of or cost of that particular item. So cost of item is 20. So you have to take 30% of that particular cost, 30% of 20, which is actually 6. Okay. Now How can you calculate economic order quantity? Root of 20 divided by I. And C means annual consumption. So you have to take annual consumption. In our question, this is about monthly consumption. So what you have to do? So for doing this problem, you have to convert this monthly consumption to annual consumption. That means you have to multiply it with 12. Okay. Then O means ordering cost. Ordering cost is per order. So per order it is 2400 rupees. And what about I? I means the carrying cost or holding cost. So that is 30% of the price paid. 30% of 20 means it is 6. Okay. Now 2 into consumption 1350. So you want to convert it into annual consumption. So you have to multiply it with 12. Then what about ordering cost? Ordering cost is given as 2400. Now you have to divide this with I. I means it is given as 6. Okay. So now you can cancel 6. Now this will be 2. And then you have to multiply them. Okay. So by doing this, we will get 1,29,60,000. So you should know how to find the square root of number. So most of you may know how to calculate this based about this calculation, but you have some difficulty with taking the square root of each and every number. So you should know how to calculate or how to find a square root of a number. So for that, just take like here 12,96,000, 1,29,60,000. So for this purpose, here firstly you have to group this number from the right side, and each group consists 2 numbers. Okay. So 0, 0, 0, 0, 9, 6, 1, 2. So we have grouped them, and each group consists 2 numbers. Okay. So now you have to take the first number. So the first number will be 12, and you have to take the perfect square root for this 12. So we know that 12 is not a perfect square root number. So you have to take a number which is less than the 12, the number which is less than 12 but a square root. Like if it case 1, 1, it is 2, 2, 2, it's 2 square, that is 4, 3 square, 9, and if you take 4 square, that will be 16, and which is greater than 12. So you have to take 3. Okay, the number which is less than 12. So 3 into 3. So you have to write here and here, both this side you have to write 3. So 3 into 3 are 9. Okay, so you have to take the first number is 12, and you have to take a number. We know that therefore 12, that is not a perfect square root number. So you have to take a number which is less than 12, and that is a perfect square root. So the number which is less than 12 and that is a perfect square root is 9, that you will get by 3 into 3, that is 9. Now for same as division that we are using, you should take the difference. Okay. So 12 minus 9, you will get 3. Then like a division, what you will do, you will take the next number. So here 96 is one number, you have to take it as a one group. So you have to take 96 immediately. Okay. Then the next step is that the number which is here, these two numbers should be added. These two number will be same. If it is 5, here also 5. If it is 4, here also 4, because we are taking the square numbers. So 3 plus 3. Okay, 3 plus 3, that is 6. Okay. And here you have to write a number and you have to multiply it with the same number. You should get 396 or a number which is less than 396. That is, if you take 64, you have to multiply it with 4. If you take 63, you have to multiply it with 3. If you take 65, you have to multiply it with 5. So here we know that 396 has a perfect square root. Like if you take 66 and multiply it by 6. So here you take the number 6 and you have to multiply it with the 6 again. So 66 into 66 will give you 396. Okay. 66 into 6 will give you 396. So I am writing here 6, and here also you have to write the number which you placed here. Okay. So 396. Now you have two groups. Okay, and each group containing two zeros. So you can take it as a common. So 0, 0. So the answer for this particular answer will be 3000 600. So this is the way how you can take the square root. Once again I will tell you, you have to group this number, you have to group from the right side. Each group should consist of two numbers. So 0, 0, 0, 0, 9, 6 and 1, 2, and you have to take the first group. Okay, and here 12, we know that for 12 that is not a perfect square root number. So you have to take the number which is less than 12 and that has a perfect square root. So coming to 3 into 3, which will gives you 9, and if you take 4 you will get 16, so which is greater than 12. So you can go for 9. So 3 into 3, 9, and you have taken the difference, 12 minus 9, which is 3, and you have to take the next number, that is 96. So you have to take both that 9 and 6 together because it is a single group. So 96, and next what you have to do is that you have to add the first two digits, 3 plus 3, that you will get 6. And here you have to make a number and you have to multiply the number with same number. That means if you are taking 64, you have to multiply it 4. If you are taking 65, you have to multiply it with 5. Here we are taking 66. So by 66 into 66 you will get 396. Okay. So in such a situation you can take 6 and you have to write the same number here. So you got 36. Now there is no remainder. In such a case you can go for this then 0, 0. As it is 0, 0, you can take 1, 0. Again 0, 0, 1, 0. The answer will be 3600. So these are some of the important questions from accounting and auditing module from the last recent exam, October 2020. So you have to go through each of these questions, and from this you may get an idea that how questions are asking from this particular area. So it is important that you should go through the basics of accounting also, and you have to practice EOQ questions, which is very directly asking question, and you can score good mark if you are doing such problems. I hope this video will help you for your preparation of Nta Ugc NET and JRF. Happy learning. Thank you.